Hi everyone, this is Roger. I'm doing that market update as of April 3rd, 2022. Just quick update on my condition. Yes, I am sick and monitoring the condition day by day. I'm about 65%. I do have shortness in breath. But I think it's important for me to just rest and recover as soon as possible. And I hope to be fully recovered, I think, by Tuesday. So right now I'm displaying the S&P futures. The S&P futures had a pretty massive run, and you can kind of, in hindsight, obviously see that there was a wave 135. So let's draw that in and make sense of what's going on in the markets. Where is it? So that's the bottom of wave 1. That's wave 2. And it kind of had like the wave 2 Tesla type of wave 2 where it faked out here, assuming that that was wave 3. But then it made a lower low, and that was the wave 2. And then we're off to wave 3. Okay. So obviously with 3 red candles lower, this is probably in wave 4 territory. So wave 4 should not go lower than wave 1 right there. Okay, cannot break through that. And that might coincide with the 21-day moving average. So a very nice structure, and it gets complicated as it starts to roll over. Friday's session, if we look at the radar, you can see it's kind of mixed. Shopify was up like 5% and it's pulled back. So there's still a lot of bears in the market. And then as the market continues to develop wave 4, then we should try to anticipate where it ends. And that's going to be a great buying opportunity, especially for SPY and QQQ. A buying opportunity here if it pulls back to 4,429. So I can probably create an alert. And if it gets less than, let's see where it goes, less than $4,448. That would be a heads up that we're getting into the 21-day moving average for the S&P. The white moving average is the 50. So I should use the tools. So 4,397.86 versus so 4,405.53 would probably be better. And then just make a note, like possible end of daily wave 4 and wave 4. So you probably get this alert, and that alert looks like it might be a little bit too aggressive. We might want to get a heads up before it triggers, so I'd probably just add like another like 30 here, right, to give us an early alert. So I guess if it does get down there, obviously there's a moving average, a 200-day moving average in between the 50 and the 200 which is pretty bullish. Like this is a bullish sign that the market is back in a bull run when it gets above the 200. But it's obviously the same as it could break through the 200 and then it'll be back in a bear market. So we're at this inflection point, and this wave structure is going to kind of help you understand, when is the time to get into maybe some SPY or QQQ calls, or, jump into the tech. So if I draw these horizontal lines, and then we get, so let's just do this a little bit more carefully. Right, so let's take the wave 1 and then project it all the way down to wherever we think wave 4 is going to end. So that's like pretty much like right here. Then the levels that I want to look for if I'm trying to get into it long would be at around here, and then I guess you probably want to get in at around the 50% retracement. So looks like when you look at this chart and you consider all the tricks and the strategies and the setups combined, you have a pretty clear picture about which way the market is going to do as the data starts coming in. So the first data set is obviously the futures opening, and if it opens up higher, then that would mean that this would be the end of wave 4, right? Could be possibly the end of wave 4. And then we move up to some level like this, making the 52-week highs. If it opens up lower, then you can see that there's a bacon and then a BLT set up to the downside to the 21. That actually corresponds with a wave 4 structure. Okay, that's in agreement, and we don't know, right? This is what we can see based on what kind of information we know about the markets and how it sets up. So yeah, I do have long positions, and because we're TGIF, I am still thinking that this is going to open up higher, and this is for the S&P. The Qs, or the Nasdaq futures, is showing a different type of structure, and this structure does not follow a wave 135 setup. What it follows is just a very strong impulsive move right here. That's wave 1, and the pullback we're getting is currently looking like a wave 2. So if that's a wave 2, then we have to look at how low that this thing can go. So if we take wave 1, the bottom wave 1, and then just project it to the top here, 50% would be setting up for an ET to the downside here at around 14,256, 14,191.42. That's the 21-day moving average. And the closest moving average is actually the 100-day moving average at 14,295.52 with a BLT set up to the downside. So this is looks like it's going to try to pull back. Okay, and then there's obviously no reason for us to not believe that this is the bottom here of wave 2. So that's what I'm assuming. And then we move up to wave 3, which should be almost 2 times bigger than this wave 1, using a Fibonacci extension tool, assuming that that's wave 1, pulling it back here, looking for the Nasdaq to break out to at least well, if this whole entire thing is wave 1, then wave 3 could actually just go straight up like that, because it should be the longest wave, right? So it looks like there's this huge breakout that's setting up in the Nasdaq. Not in this time compressed window. It's going to be, obviously, this is exaggerated, but I think if price gets above the 6, gets above the 200, and we start trending, and all these moving average, the 50 and the 21 start stacking in the proper sequential format under the 6, 8, then we could be in this long wave 3 for the next 6 months. When we look at the monthly candle for the Nasdaq, okay, it paints a different picture. Obviously, we get these pullbacks, and if we measure the pullbacks using the Fibonacci trend extension here, it looks like the average pullback, let's try to use a different tool here, is approximately 20, that's 24% in 3 months. That's 32% in 2 months. And that is about 21% in 3 months. So it does look like the symmetry on the pullbacks are quite consistent. In this point right here, it looks like we're rolling over, and if we try to kind of make sense out of this, we would assume that the downtrend is still beginning. Very interesting to see that these monthly candles are showing a double bottom but a lower low in the month of March. And this is the monthly candle for April, which opened up actually higher, and that could set up for if this is wave 1, assuming that's wave 1, and wave 2 would be like right there, the open. Then the 1272 extension will take us up to 17,175. Okay, and that's going to increase in probability and the likelihood if the Nasdaq gets above 15,232. So in retrospect, that would be likely the likely structure if we get above the 200-day moving average, which is at 15,137.70. Weekly, yes. So on the weekly time frame, we have some rejection, and we have this 6-day moving average that is way below current price. So a pullback is possible, right? And then that BLT doesn't really kind of look like the classic BLT that we see most of the time. We had the BLT from 8 to 21 to 50, and then now we're getting this pullback from the 6 price closing below the 6 under the 8, and now it could just drop all the way down to 14,224 just on basic profit taking. And April is a very bullish month, so that's because of earnings. And if this does pull back down to here, and wave 2 happens to be around 14,400, I think we need to take advantage of that, because I think that is a wave, end of wave 2 on the Nasdaq. All right, so let's go through that's the update for the market. VIX, let's take a look at the VIX futures. So VIX futures not really applicable. Maybe I'll use the ETF VXX. See what it shows. Yeah, you can't really say too much about this. It's quite volatile, and it keeps on splitting, right? So short-term wise, on the weekly time frame, yeah, there is a possible spike here because of the Magic Mike wick that could develop this week. If it doesn't, then obviously risk is on as the VIX starts to roll over, and it also performs an ET with an A7 that's squeezing, with the A6 that's also squeezing, and in a downtrend. And I still believe that there's a gap somewhere around $17, but that's not being reflected in the ETF. It's only, you can only see that in the futures. Okay, so now let's go to the 750R tickers and just talk about what I see here. I'm just going to look at two time frames, the daily and the 78 minute. So for Apple, it looks exactly like the S&P. You know, Apple had this massive rip, and you can't really apply a wave 1, 2, 3 structure because it doesn't match, since this 2 is lower than the beginning of wave 1. So obviously that's not the right structure. And if we assume the structure from here is to be wave 1, that's a pretty long wave 1, which means that wherever wave 2 ends and it starts to, and it becomes a wave 2, then the wave 3 for Apple is going to be lasting much longer than this wave 1, because wave 3 has to be the largest. So if that's, I don't think that is, that if we assume that is wave 1, which is pretty crazy, then wherever wave 2 ends, that would be the beginning of wave 3, and then wave 3 should be much larger than wave 1, taking Apple probably all the way up to 200 into earnings. So when will that happen? Well, most likely it will happen when the Hikinashi candle here turns green. So it's currently red, and I wouldn't be buying Apple. I would be buying Apple once it turns green, and I'd buy that green Hikinashi candle 10 seconds into the close. So somewhere around here before earnings, which is scheduled April 28th. So if we get 3 days down on Apple for some weird reason, if the market starts to tank, then obviously the Hikinashi candle is telling you that the centroid, which is the center of the daily candle, the volume and the price action during that day has created a red Hikinashi candle, indicating that the bias is on the sell short side. And then using the information that I've taught everybody, we might have this setup that is a BLT to the downside. Now, a setup is a setup. There are strategies go long over the weekend on a TGIF, which I think it did trigger. But you can see the risk and reward is not really attractive enough to go like all in your full position size. So that is a little bit of a difficult trade to take, and it is contradicting a long position because of the simple, Hikinashi red candle signal here. It could be wrong. So then you'd look at the 78-minute time frame and then identify, a 78-minute TTM squeeze, maybe throw in that see if there's any Darvish channels forming, which kind of shows there is a Darvish channel forming here, but not a redundant 78-minute TTM squeeze. So, I mean, it's still valid to go higher, since I think it did trigger TGIF, but then you just have to kind of think about your risk and reward. It's just like the the best setup going into a TGF 60% edge, and I would say it's less likely you would want to put it in a full position size. So Shopify, let's go to Nvidia. So Nvidia has been selling off, and I guess one can argue that this did have a wave one. Either this was the wave 1, and then this is 3, and this is 4. So it does look like it's trying to hold above that 21-day moving average, which is the ET pulling back. And on the A6, there's nothing scanning. It just came out of an A6, right? So I guess it's pulling back, doing that wave 4. If I look at wave 4 structure, starting from wave 1 here, 2, and then massive 3, and then 4 cannot enter, so that's the lowest it can go, 233. That would be pretty brutal, catching a falling knife type of structure. But if it does hold around here, okay, around the 21, I would look at that very carefully as the end of wave 4, and then wave 5 would take out, move higher, making new 52-week highs, attempts into an earnings run, which would be around, maybe 400. Well, 300 is the first closest, nearest psychological target, and then after that it's 400. Shopify. So I have a position in Shopify, and it's got a lot of gaps, and it does have this ideal short squeeze setup, okay, and this candle right here is not really real. It never printed 779, which is interesting because we have false data that is being represented in the chart here. So that doesn't happen very often, and if it did happen, it happened on purpose. So I think it's hard to say like if this is really going to this data set right here is applicable, but let's say it's not applicable and just look at the Hikinashi candle. It is trending sideways with a slight bearish Q there, and when we look at the way that the market traded last week, it looks like Shopify did absolutely nothing, but actually Shopify did move quite a lot in terms of volatility. It moved on average within 2 days 10% plus or minus, and during that chop, every attempt when it was selling off, especially these last 2 days, it didn't take out any of the previous lows, and I'm not sure if they're waiting to do that on Monday and Tuesday, but it sure had a great opportunity to make just a little lower low than that candle right here and this one right here. And even on Friday, there was a huge short squeeze. Could have made a lot of money on those lottos, but it ended up becoming an inside day candle. So what do I do here is just, I still have, it is my largest position size. It is a risk that I'm using with profits from the Tesla trade from last week. But if I go to the 78-minute time frame and I see what I have right here, there's actually a 78-minute TTM squeeze that's forming. I prefer red, and that if we take a look at if there's any Darvas channels, there's not much of a Darvas channel forming at the moment. In terms of the weekly, we have this interesting double D BLT, so that's the bacon, 2 lettuce, and the weekly candle should be equal to or less than this candle right here. So if I measure that candle, that's about 33%. Let's take half and just say, okay, half of that is 15%. So we should get to about 790 in a short, within 2 to 3 days on a TGF cycle. That would bring it up to a double top to 790. Obviously, if that is a wave 1, 2, and 3, because that's wave 1, 2, and 3. 3 should be is the largest wave. We'll take the Fibonacci trend fib extension tool and just kind of like draw in the fib levels. 1272 is taking us to 853 for that target. So when will that target be met? Within less than 2 weeks. And what am I looking for? Well, basically, I think it's going to happen sooner than later. And the reason why is because we have if I hide all these gaps, you can see we got a Darvish channel here with the purple D. That's short squeeze territory. So if some news comes out on Shopify or something, and it did close as a decent looking inside day doji, that thing could just rip up like and squeeze like it tried to do on Friday. It could just go up 12% in one day. Okay, that's the short squeeze. So it could just continue to consolidate. So then if that's the case, then weeklies contracts expire next week, they're not going to work, right, that well to capture the wave 3 here. So if that's wave 1, this is wave 2, and we're not getting those fake out wave 2s, we could, right? So it could just drop where that's the end of wave 2, because this was a really nasty pop and drop. So if it does happen to be a wave 2 that ends like right around here where that gap it was, then yeah, it would definitely take a little longer than, so let's say, because with the earnings, then the wave 3 would take, pretty much the whole entire month for it to run up to earnings. All right, Tesla, very situation here. We have a gap and we have deliveries, so nobody really knows what Tesla's going to do. It is in everyone's best interest to not to short Tesla unless you have profits to sacrifice, or you just you have a clean setup. There's really no reason to short a company that is doing well above all competitors. So the only thing here now is just when does wave 5 end and how to anticipate it. So whatever the result, this does look like we got into this trade right here on that dojis. We got another doji. It could do the same thing and pop, right? And that's upon a binary event. The news that came out last week, that isn't really reliant on any numbers to compare with. This was an announcement that this stock split is being talked about, and that news really excited the share price. Here, the doji is again a great candle to trade with. However, I think if this is 70, there is a 70-minute, and the problem with Tesla is that this is a binary event that is really subjected to the consensus. So I don't know what the expectation was. It's 310, 309, whatever. It's not a huge beat. Maybe it was priced in, and it is, the risk and reward is huge. Not hugely not in favor for those who are going to go long. But I wouldn't approach this like, the TGF cycle has been doing very well for Tesla, and it did exceptionally well last week. and then you have profits generated, and then you just have to stick with your position sizing. And if you look at this position sizing here relative to look at the price of Tesla relative to where the 21-day moving average is, you probably wouldn't want to put in another full position size. Maybe use half instead. And then if it does, if this is a bull flag and the numbers are, markets are liking the numbers, then yes, there's a chance that Tesla moves up to 1,117. And then I think there's a lot of gaps like above it, up to 1,200. Then I think 1,100, the bottom of this will be the resistance, and it'll probably consolidate there and try to attempt to fill the gap sometime later in the week. So this is a possible move, but I would, I'm not in the position. And actually the algorithms were selling short Tesla. It's very choppy in the last 4 days. Amazon is pulling back. There's a gap. I'm not sure how that, but the same structure. There was actually a wave 1, 2, and 3, and then I actually completed a 5. So if you can see that here. 1, 2, 3, 4, 5. So now it's going into some corrective wave outside of wave 5. Most likely going to pull back if the market opens lower. But I think this pullback will consolidate a little longer and then pull back sometime in Tuesday. I'm not really sure about this one, but the volume is not looking the greatest at the moment. Google has a huge short squeeze setup. That's with the purple D, triple bottom, and it looks like it has a chance to try to break out above 3,000. I think there's a split meeting coming up, so not sure exactly what to expect. But if this gets back above 2,826, which is that 6-day moving average, then I think there's going to be a breakout to 3,100, making a new 52-week high before earnings. Netflix, I had to close these positions off, and there's a wave 1 and not a very complicated wave 2. It's too complicated. Netflix has got this massive gap here. I think if I were to get back into Netflix, I'd wait for some redundancy. That's overlap. That's basically 2 TTM squeezes with different candle length periods. One is 12 and 20. And I'd wait for it to show those red dots on both of those lengths. That's called redundancy. And then I'd wait for the third redundancy, because these are, what I'm trying to do is use 3 different non-correlated indicators: squeeze pro, squeeze pro with different lengths, and then a Darvish channel. If those 3 start to appear, then I'll look at Netflix. As of now, there's nothing really going on. On the 78-minute time frame, there's probably something there. Yeah, so there is redundancy on the 70-minute, and then looking. So there is no Darvish channel. Taking that information, there could be a pullback but I would wait for the Heikin-Ashi candle to turn green. And if it does turn green on that day, then you basically wait to the end of the day and buy 10 seconds into the close contracts for earnings. Roku, hopefully this has the redundancy that I like on the Heikin-Ashi formulation, but on the regular candle formulation, it's not there. It does look like a bull flag. And on the 78-minute time frame, there is redundancy. Roku, while we're back in Roku again, last week Roku printed out 10%, especially holding after the 10:30 a.m. I think the algorithm is back in Roku, so it's going to continue to buy on Thursday into Friday and then push it up higher into Monday and Tuesday. So I have a position in Roku. Boeing has a wolf wave, so it is something to monitor. And then earnings is in April 28th. But Boeing it has too much bad news, especially around the latest plane crash. So it's just, I'm not sure what's going on with that company. Coinbase, yeah, so Coinbase looks like it had this wave 1, 2, 3. It's hard to kind of really say what this is doing, but it does have the same structure as the Nasdaq, and it broke through the 8, looking to maybe go down to the 21-day moving average of 179, and that might be the bottom. There is a gap open, which is brutal because there's gaps everywhere in the market. Facebook, yeah, so Facebook has a really good looking setup here. As long as it trades above that 6-day moving average, there's a good chance that it could try to attempt to fill that gap, 248, at least the bottom of that gap at 248 before earnings. But Facebook, I mean, no matter how high this thing goes or lower, I'm just not a big fan of Facebook. It's garbage, and I don't believe in the platform, in the Facebook page or Instagram. I think it's all garbage. Personal opinion. Okay, so that's about it. I don't have really much to say. I'm gonna now stop and recover. Hopefully I can recover such that I can come back on voice. But that's pretty much it. I don't really have any too big of expectations going into this week. I hope to have the mini course running as soon as possible. We did miss out on a couple of them. Missed out on the ideal long trade setup and wolf wave today, simply because I just don't have enough energy. But hopefully this video serves a purpose, just so that you know what's going on with the market and the structures that I'm seeing, and that will help you make a better decision. All right, thank you very much and have a great day.